All right, the last video that I did, I got a lot of shit because people thought that I was being rude, calling them stupid, said they couldn't cash flow their Bitcoin. And actually what I said was, you're too stupid to cash flow your Bitcoin. And in this video, I'm gonna tell you why I am even probably 95% not going to bother cash flowing my Bitcoin when it comes to these options being released on these ETFs. And I'm also going to cover in this video the strategies that I will use with these options so that you can get a greater understanding of, you know, the risk parameters and everything else regarding these products out here that are coming out in the next few months, hopefully. So the first thing of you being too stupid, you are too stupid. It's just majority of people are too stupid. Even when I think about, you know, myself being able to fight against high frequency trading bots, a team, an army of people that are sitting there 24/7 monitoring options activity. You can't do, like, most people cannot do that. So we're going to talk about, you know, a couple ways that you can, and we'll be able to I will be able to utilize options. I'm not saying you should do anything. And I'm also going to talk about why I think it's a trap for anyone who starts trying to utilize the cash flow generation ability of selling covered calls, basically, on these Bitcoin ETFs. And I'm going to try and explain to you why I do not think you should do it and why you are setting yourself up for a trap. And if you want to generate cash flow, how you should do it. That's what this video is about, which is why I need you to subscribe to this video, because there's going to be a lot of people out here excited. They're going to be selling trading programs. They're going to be doing all this shit, trying to get you to cash flow your Bitcoin. And what's going to end up happening is you're going to cash flow your Bitcoin. 1 month's going to be fine, 2 months going to be fine, and then you're going to hit a month and BlackRock's going to suck your Bitcoin straight into their fund. Now, of course, you know, the title of this video, it's not a BlackRock trap. This is the risk of the market. This is the risk of this type of product. And I'm going to walk you through exactly what the risks are of this type of product so you can actually try and understand it before you go in and try and lose your Bitcoin, right? Because the ultimate goal of Bitcoin is to hold Bitcoin. It is to hold the asset for as long as possible. I fear that there are going to be a lot of people who are going to sit here trying to get excited, you know, Viagra excited for options because they think they can generate a 1%, 2% a month income, and then they're going to end up losing their entire stack. And then their grandchildren are going to look at them and wonder what type of weakness is in their lineage, because this person couldn't hold on to their Bitcoin. Because the ultimate goal is holding on to the Bitcoin. It's holding on to the most finite asset humanity has ever created. That's why, please subscribe to the channel so we can get this video out to as many people as possible and share this video. So let's talk about this. Here's a few reasons why I am souring on the idea of generating cash flow using covered calls on my Bitcoin, on my IBIT position. Firstly, when you are selling a covered call, what you are doing is you're basically selling the right for somebody else to buy your position. You're saying that I don't think Bitcoin's going to go up to a certain number by a certain date, and I'm going to give somebody the right to speculate on whether it happens or not. That's basically a covered call. And when you're doing that, what you have to think about is, what is the risk-adjusted return that I'm generating on the underlying position? And is it worth it, right? That's really the question. It's very cool to get excited about a 1 or 2% per month cash flow, but is it worth it? Is it worth the risk? For some people, it will be worth the risk. For other people, it won't be worth the risk. And I'm gonna, my thought process with this is as follows. I think that if you are going to use covered calls, you should be able to generate a doubling of your return of your CAGR of the underlying asset in order to make the risk of losing that underlying asset worthwhile, especially with Bitcoin, because there's a chance you may never be able to buy it again, right? Because of the scarcity and the finality of the asset. So think about it like this. If Bitcoin is CAGRing at 50% over the last, you know, let's say 5 years, you've now got to be able to generate 50% on your options, right? In order, above and beyond Bitcoin, in order to make it worthwhile by my risk profile, right? By my risk profile. So that's 4.16% per month that you have to generate using options. Now the question is, and this we will wait to see, but based on my experience and understanding, I just don't think it's going to be viable. The question is how close to the money do you have to go in order to generate a 4% return on a monthly basis? What do I mean by close to the money? How much risk do you have to take, or at what price do you have to allow somebody to speculate on? So let's say Bitcoin's at 60,000, where it is right now. And you could generate a 4% return by allowing someone the ability to think it's going to go to 100,000 next month in an election month. That might be worth the risk, right? Because it's highly unlikely that's going to happen. But if you could only generate a 4% return and you have to allow them to buy it at 70,000, well, Bitcoin did that in the last 2 weeks. It's had that move in the last 2 weeks. So the risk profile isn't worth it, in my opinion. So you have to do that month in, month out, every single month in order to make it worthwhile to cash flow that Bitcoin over a period of a year. So the risk-adjusted return, I want you to start thinking about that. Bitcoin is your underlying asset. It is compounding at, let's say, 35 to 50% over the next 10 years. Whatever you do with it, whatever you do on top of that, you have to think about it and say, is it worth me taking this risk while having the opportunity and the chance of losing the underlying asset that's already making me 35 to 50%? And the question you got to ask yourself is this: if you had a savings account that was giving you a 35 to 50% return on a yearly basis, what risks would you take to lose all of that money? Right? That's really the question that you've got to ask yourself. And I would say that the risk profile, it goes away. Like, I don't think a lot of people would be taking a lot of risk, which is why what happens when interest rates go up is people put money in the bank and they stop going risk on other investments. That's why people stop going risk on, because they've got this interest rate that's being paid to them. Now with Bitcoin, you've got 35 to 50% a year CAGR, right? And of course, there'll be morons out there like someone I know who's probably going to be watching this video who said, yeah, but it didn't go up 35%, for the last 2 years. You can't look at an asset like that. You've got to look at an asset over a period of time. If it's CAGRing, compound annual growth rate, at 35 to 50% over a 10-year window, over a 5-year window, that's what you want to focus on, not on the yearly performance and then try and lose that asset, especially now when we're entering a period where Trump's maybe going to get elected and start buying up Bitcoin for the U.S. You've got nation states talking about buying up Bitcoin. You've got Blackrock in the game. The game has changed now. So we need to reevaluate based on the next year or 2 years on what's going to happen. All right, excuse me. I have to go get a throat lozenge. So I don't think it's worthwhile for the average person to be sitting there going, I'm going to try and generate a 4% per month return on my Bitcoin and give somebody the chance to take it. Because what's going to happen is there's going to be teams of people on hedge fund side, on asset managers, nation states, et cetera, that are going to be sitting there on the other side of these options chains trying to figure out how to take your Bitcoin, how to basically get assigned your Bitcoin. Now, there's two sides to this argument. If you want to generate a cash flow with a certain percentage of your Bitcoin, well then there's ETFs out there that are specifically designed to generate cash flow on an underlying asset. And what it means is you give up the capital appreciation, but you get the monthly cash flow. And I think that's probably going to be a safer way if you want to utilize one of these products. I think that could be an interesting way to do it. But do I think the average person should be sitting there going, I'm going to sell Bitcoin's at 60,000. I'm going to sell a call to allow somebody to buy it at 70,000. I do not think that's something that people should be doing to try and make 4%. Now, the question is, okay, so what if you can make 1% a month? Well, 1% a month is 12%. So now you're generating, a third, if you're lucky, of your CAGR on the underlying asset, and you think that's a good return. I don't agree with the risk-adjusted return on that. And of course, when you study S&P 500 cash flow funds and things like that, that's happened, just buying and hodling typically beats out any amount of cash flow generation that somebody can do, because eventually you will get called out on your position. So How would you do it then? If you do need to generate a cash flow, how would you do it? There's a couple ways to do it. Number one, there is, of course, you can just sell 1% of your position on a monthly basis and take the tax hit on that. That's not my preferred option because I want to try and maximize the amount of Bitcoin that I'm holding in 20 years' time. The option that I think makes most amount of sense is planning around, number one, planning around liquidity events. We're going to talk about that briefly in a second. And number two, I think that it's imperative that you start learning about the options that will come out in the future, they're not here yet, of how you can borrow against your ETF positions. I do not think that borrowing against a spot Bitcoin position is going to be a smart thing. I do think borrowing against a spot ETF position, an underlying ETF position will be the way to go. Now, if you only want to generate a 1% a month cash flow because that's your risk tolerance and you're safe, you feel safe in that environment, well, you can just basically borrow against 1% of your position on a monthly basis and generate your liquidity, not sell, not have a taxable event, and spend that money, and then Bitcoin's going to capture or fix or give back the amount of money that you borrowed through the CAGR that it generates on a yearly basis over a period of time, right? I think that is a smarter strategy than trying to sell a covered call to generate that income. Firstly, the covered call is going to be a taxable event. Secondly, you've got the risk of losing the underlying asset, which again, I'm framing this video from the point of the goal is to own as much Bitcoin at the end of your life as possible. And I do not think looking at the risk-adjusted profile of selling a covered call on a Bitcoin ETF is going to help you do that. Again, there's going to be masters of the universe, the hedge funds, sitting on the other side of that trade waiting to collect that Bitcoin because they can make a huge amount of returns on that, right? If you know that an asset is CAGRing at 35 to 50%, you have no issue giving away a 1% premium just in case it hits, right? And it will hit at some point, right? And you make your money back based on the price appreciation of the underlying asset. So there is a lot here that doesn't make sense from the covered call selling perspective. If you're trying to make 12% a year, there's probably going to be a better way to do it, and I think the way to do it is to just borrow 1% against your position on a monthly basis. That's going to be smarter rather than trying to take the risk of selling the covered call. Now, there's going to be people here who think they're really smart and who think that, they're going to say things like, oh, you shouldn't sell Bitcoin, you shouldn't sell a covered call on the whole of your position, but maybe 10% of your position. Well, the question is are you willing to lose 10% of your Bitcoin stack over your lifetime? That's really the question. I am completely soured on the idea of selling covered calls against my Bitcoin position in any manner whatsoever. Now, that may change based on how out of the money I need to go. So, for example, let's say the options come out and Bitcoin's trading at 60,000 and I can sell a covered call at 85, 90,000 for 3 weeks away and make 1%. That might be a risk that I'd be willing to take on a small percentage of my portfolio, but I do not think that the average person can figure that out, right? I think most people are too stupid to figure that out, and they're going to be facing teams on the other side that are planning the options change and structuring the options change to take your Bitcoin. So I want you to be aware of that. But outside of that huge variance, that huge price appreciation to make 1%, there's no way I'm selling a covered call on a Bitcoin that's trading at 60,000 at 70K, thinking that I'm gonna, find a good opportunity here to generate this cash flow without my Bitcoin getting stolen from me at some point. This is a trap. It is a trap in the markets. It's always been a trap in the markets for the average person, and I do not think that most people should do it. Now, what option strategies will I be using? I'm gonna do more videos on these, so please subscribe to the channel, but the option strategies that I will be using are as follows. I will utilize call options at the 200-week moving average to buy Bitcoin and speculate on the price appreciation of Bitcoin over a long-term period. I will use put options at what I perceive as the top of the market in order to hedge my portfolio without selling any of my Bitcoin. Those are the two strategies that I think still make sense for me, and I will be executing those, and I can absolutely do more videos on those if If anyone wants to learn that, please let me know in the comments. But selling covered calls is not the right idea. It is a trap. You will get your Bitcoin stolen from you. The risk-adjusted return does not make sense at all. And again, be very, very careful, because the goal is to end your life with more Bitcoin than you have right now. That is the ultimate goal. So, I hope that video makes sense. Any questions, leave them in the comments, but ultimately there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.